Hello and welcome to this Carrier Update brought to you by Powerfleet. I'm here with the one, the only Tony Mulvey. Tony, good morning. What are we kicking it off with?
Obviously got to start with volume. So holiday weekend, what we saw on Friday, when we got Friday's data Saturday morning, pretty big dip in volumes. Not really a surprise. If we look back in this purple line, we see 2021 volumes. And guess what? We had kind of a similar drop right there around Easter weekend. We saw Easter weekend was a little earlier last year, right around that first week in April. But I mean, right now, volume levels, this gap is right at 20%. I mean, dead on the number, 20%. It's the widest it's been, right? So I think that's, obviously it's holiday affected, but it's been on this downward decline. And then we saw this sharp drop. And I mean, where we go from here, I mean, there's nothing that seems to be that we're gonna get off this little downward slide. I mean, look at where we were. I mean, obviously 2020, we saw this run up in volumes in this green line before they plummeted with around the lockdowns. Obviously, I don't think we'll see it drop that far this fast, right? But I mean, we are definitely headed back towards that 10,000 mark, where if you look at where we were in 2019, so going further back in the green line, it's kind of where we were. So I mean, it seems like that's the trend line we're on, and there's not really been anything to break it, right? Everybody's talked about the Shanghai lockdowns and things like that. That hasn't driven this yet, right? Those impacts of that freight not coming over aren't the reason why we're seeing demand fall off at the moment. We'll pull up our next chart. It's gonna be our outbound tender reject index. We're gonna see some of those impacts that we've seen where that downward movement happened on the rejection side. So obviously we've talked about it a lot, capacity coming into the market. And guess what? I mean, add that with new contract rates rolling into effect, and you get this steep decline in rejection rates, right? I mean, we're talking almost 1,500 basis points between this year and last year. That's a huge difference when you think about, I mean, we're at 10%, right? I mean, we talked about it before, and even in the 2019 era, right, going back that far, we talked about 7-10% inflationary for spot rates, right? Well, now we're at just above 10%, and it's deflationary for spot rates. Why? Because we've been at 20+% for 20 months. So again, this decline, I mean, if you look at the volume decline too, they follow a similar trend. And that's because that outbound tender volume index includes these both accepted and rejected. So when you see a rejection start falling, it can pull volume levels down with the rejections. Same way it works on the upside, right? Where you see an influx of rejections, it may look like volumes are higher, but that's just more tenders having to go out, right, that aren't accepted. So we've adjusted this, and you kind of look at that and you see, well, volumes right now are down about 4%. Not really a surprise when you kind of think about overall. I mean, this is first prolonged period that we've had where volumes have been negative year over year when it wasn't holiday affected. So I mean, that's kind of the telling part is like, there's no catalyst like a holiday that shows this big dip in volumes. I mean, I'm talking even prior to Friday's data. So that number's even gotten extended. I mean, we were down like 2%, now we're down 4%. So overall, this will be a little tease, but we've seen it on the van and the reefer side really drive these rejection rates lower. And those flatbed ones, yeah, we were at above 40%. We've come back down into around the 30% range, which again, not kind of expected when we've talked about it, how the flatbed market, industrial production, all of that starting to ramp up, that manufacturing, housing starts, we're still pretty strong. And guess what? That's an impact on flatbed capacity.
Definitely is. I mean, Tony, when you think about the supply chain, I mean, it took a massive world event to really kind of prop up freight volumes to this level, and so many other variables to kind of go into effect like that. When you hear stories like we had on the headlines this morning, Governor Brian Kemp filed for a state of emergency with the supply chain. When we start to see actions like this, does it kind of seem a little bit late to the party when you see, okay, we're coming down now, we should have had all this kind of a little bit earlier on?
Yeah, I mean, it feels like it's like anything, it's going to sound bad, but anything the government does, they don't act necessarily fast enough, right? They try to, the first was throw money at it, and guess what? That propped up volumes, right? And you can stay at home, spend the money. Guess what? We shifted from services to goods, all things that are good for freight volumes, right? Well, now we're coming down, we've added all this capacity, exempting hours of service now. What's that do to clear these supply chain clogs that are basically unwinding themselves, right? So I think that's the key, is like the supply chain's correcting itself, and now we're adding in things that are going to help correct it, but it doesn't really need it when you see some of these declines that we've seen. So at least that's kind of my thoughts initially.
Tony, thank you so much for this update. Looking forward to the next ones throughout the morning. Right now, we're going to toss it back over to Kaylee Nix.